Hi everyone. Uh, thank you for coming in that early. So we are going to begin the seminar proper in 7:02. So just give them some time for the rest to join us. So grab a notebook and a pen and get ready for the training. So I will start at 7:02. Talk to you again. Okay, so it's 7:02 p.m. I should start my seminar proper, but I still see some people are still trying to log in and so it's okay. I'll just start for the benefit of those who have been here early. So good evening once again, ladies and gentlemen. Thank you for finding time to visit tonight's webinar on Beginner's Guide to Gold Trading. So this is Shermaine Tan speaking for your presenter for tonight. So I would assume that most of the audience tonight will have some form of investment in gold or will be looking to add gold trading to your investment portfolio. So for tonight's session, I will try my best to cover as much as I can to assist you in understanding the ever-changing market condition, ever more so, especially in this COVID-19 year. So however, webinars like this can only assist you that far. So I will still always strongly suggest that you engage, someone that is expert in the market, like a broker or a mentor to help you to so-called keep track on your investment portfolio. So I will share more on that later. So during the webinar, if you do have any questions, just continue to type in the question box. I'll keep my eye on the question box. So as and when, I will just pick out the questions as you float over to me. Okay. So before we begin, let me just do an administrative question. If you can hear me well, just please type yes into the question box. Yeah, okay. Thank you for responding. Right, so let's begin tonight's webinar. Oh, sorry. I think just now there's some technical issue. So let me just repeat myself again. Um, Doing a brief introduction of myself. So I'm a licensed representative with MAS and have been in the industry for more than 10 years. So during these 10 years, I've seen and experienced many types of market movement and how trading has dramatically shifted till now. So when new investors or new traders come to me, I would then assess their investment portfolio as well as study their risk appetite and recommend the appropriate trading strategies that match their lifestyle. So I think this is very important because you see, a lot of people, they come to me, they only have an idea that, okay, I want to trade gold. But however, when I kind of like try to understand, their lifestyle and what are they looking for in terms of their target returns, then slowly they reveal to me, oh, they are heavily invested in stocks, in even with banks. So, always remember that your success is not measured by how many right trades you have, okay? But it's an overall picture, like, are you still able to earn above your target returns at the end of the year? And this is very important. So, so most of the time, my traders, they will discuss about their strategies with me. So, in that process, I can spot the loopholes or potential pitfalls if I see that they have invested heavily in one basket. So, also, right now, currently, I conduct twice a month live coaching sessions with my traders where we meet online Zoom to discuss about the current market situation and what techniques they are employing to manage their portfolio as well as their risk. So during these months, so far, I've been doing all these meetings and the feedbacks are quite good in a sense. I mean, we're still able to have that kind of fellowship lah, as per se. So that's just the brief introduction of what I've been doing and my scope of work. So let's just go into tonight's webinar proper. Okay, so for the first part, I will be touching on the outlook for gold in the fourth quarter. If you have been listening to many different types of presentation outlook for the various asset classes, tonight I will be sharing mainly on gold and the impact of the upcoming events that will contribute to the gold movement. All right. So before we start any analysis on the markets, first we need to know about the unemployment rate. All right, so you can see here, this is quite an alarming figure. US unemployment rate skyrocketed, okay, as a consequences to the COVID-19 lockdown, right? Business folding up, big establishments, reports, news they have been releasing, labor force has to be cut to stay afloat. So you can see that in April, we recorded a 14.7% of unemployment. We have never seen such figures before. Okay, now as a benchmark, we usually take about 10% of unemployment rate for pandemic issues or global events such as war, rumors of war and ongoing war. So 14.7% is quite amazing, So although, it went down below the threshold of 10% currently, but however, this is a figure that, most of the contenders for the upcoming US presidential election, they would already have taken note into that because you see, for unemployment rate to reduce back to even the figures that we see in 2019, is going to take months and a lot of stimulus. So I will elaborate that further. Next thing I want to highlight to you is the GDP. So you see, over here, the real GDP change, as you can see, it recorded negative in the second quarter. So again, this shows what pandemic would do to an economy if it is not handled properly. All right, so huge negative figures. This is something that I have never seen in my entire career before. Okay, So this is quite amazing. But anyway, going forward, let me just show you what are the key drivers according to my opinion for the gold performance. First, number one definitely is vaccines, okay? The second one is global tensions, okay? But of course, right now we are looking at mainly US and China tensions going on. And of course, the US presidential election, okay? So first and foremost, for any virus to be categorized as pandemic, the government need to track the spread as well as the patient's recovery rate and trace the virus spread patterns. And then they identify the vulnerable group, which Singapore has done very, very well. So of course they raise, while they do that, okay, they raise to curb the spread, okay, either by treating it in isolation, but however, the last step on their mind will be locking down borders, because border lockdowns is not as simple as just closing borders and stop the planes from flying. There's a lot of repercussion, especially right now. We are so well connected with all our trading partners, our trading countries. Locking down the borders will take a very, very heavy toll on the economy of the country. Okay, so far, global pharmaceutical companies, they are racing to develop vaccines, okay, but governments have been injecting not vaccines, but monetary stimulus to aid the population. As you can see in Singapore, our government also did that. But there is a threshold of how much they can inject without tipping the economy into hyperinflation. So all these are happening while global governments are racing to develop the vaccines out. Okay, now US projected their first vaccines to be out in November. All right, this timeline is to squeeze in to fit the political agenda, from my observation. All right, so however, there are news releasing these few weeks that they might not be able to meet the projected timeline. Now, so far, there is about 5 pharmaceutical companies that are in phase 3 already, okay, just before regulatory approval. Okay, but however, all of them projected mass distribution in the 4th quarter of next year, which is quite a good estimation, because for vaccines, right, we need to go through clinical trials after trials after trials. So to push them to be developed within that few months, it's quite far-fetched in that sense. All right, so now moving on. So I mentioned about geopolitical tensions. We're talking about US and China trade tensions, in fact. So this is also one of gold driver, all right? We observe that the only thing that has been escalating during this slowdown on this year especially is the US-China tensions. This is something that has been going on for the most part of President Donald Trump's leadership. So for this, we don't see a chance for the tension to dissipate anytime soon. So you need to look out for any news that is going on. Okay, now, so however, what is immediately in every trader's mind right now is the upcoming US president's election. I was just discussing with my traders just now, and they were just talking about how it's unfolding in the US president election with the news and things like that. So I'll just briefly run through how it's going to be, the timeline and how it's going to be conducted. Okay, so we are just 2 weeks away from the polling dates, as you can see. In fact, we gathered from news sources that both Trump and Joe Biden agenda estimate to cost about 5 trillion to about 5.6 trillion over the next 10 years. So both plans will prove substantial tailwinds for the long gold trade. All right, so we are starting to see some data coming in out that points to possible inflation. All right, now different indicators are showing better than expected figures to the upside. So on top of that spending, the US central bank will now be keeping rates low until inflation is above 2% for an extended period of time. How long? They didn't say. So we would assume it's going to be very much extended, at least for the next whole year, in fact. So this is ultimately bullish for gold in long term, all right, in my opinion. So from this timeline, you can see that voters will be heading to the polling station on November 3rd. This is something that you should be keeping in mind if you are trading gold. All right, so now after the election, gold will remain on top of everybody's list. Okay, for me, I think hitting $2,000 is not a big deal because it already broke the record, the last record. So, and it's going to go higher than that. Okay, now one significant risk that remains for the fourth quarter is contested election. Now, this risk is that after the election, the results will not be called, meaning there will be political infighting, and therefore there might be a possible civil unrest. Of course, this is pretty much the worst case scenario. Okay, so, and also contested election would delay stimulus, all right, the plans that they have put on, if it's not passed ahead of the November 3rd deadline. Okay, so let me just give you a brief rundown on the whole procedure of the president election so that you understand why am I talking about political infighting and possible civil unrest. Okay, so when it's going to be is on 3rd November. This is to elect a new president, House of Representatives, and the Senate. So elected president is the head of the state, head of US government, and he directs the executive branch of the federal government. And he is also the commander-in-chief of the US Armed Forces. So a lot of times I do have this question that says, okay, so does he have absolute power? No. All right, we have the constitution that will provide a separate power. As you can see on the lower graphic, constitution consists of legislative, they will make the laws, executive will carry out the laws, and the judicial, they will interpret the laws. Okay, now, so who is running? Is Mr. Donald Trump, aided by the current Mr. Mike Pence, his vice president, and versus Mr. Joe Biden, aided by Kamala Harris, the current senator for California. All right, so how is it different this time? During the COVID-19, there is this option of mailing in your votes. Okay, so as much as tens of millions are opting for this option. Of course, through snail mail, we know the problem. Votes might not reach the ballot count in time. Secondly, there might be fraud allegations. Okay, so this might mean that the elections would have a contested result with a no clear winner on 3rd November. Okay, I mean, which is on 4th November. So they will vote on 3rd November, it will come out on the 4th November. Then again, contested elections, the results might be brought to the US courts. Okay, but I tell you, either side will not accept the court decision, further leading to an extended US leadership vacuum. So, you know, with this vacuum, right, as mentioned earlier, might result in civil unrest and political infighting, you know. So what are the possible outcomes? All right, could be anything. Currently, president is Donald Trump, and the current composition is the House retains Democratic majority and Senate retains Republican majority. Okay, so of course, what are the polls saying? Currently, Trump is still trailing Biden. Of course, anything can happen as we learned from the 2016 elections. Okay, so after analyzing the US presidential election makeup and the possible outcomes and repercussions, let's see how this translates into the gold performance. Now, for gold futures, we are looking at a timeline of significant gold move throughout these 10 years. I plotted it out. And the highest gold ever done before this year was in 2011 at 1927.30. Now, and of course, this year gold broke this record at 2089.20. Fundamentally, to me, I think it's due to COVID-19. So let's just recap what causes gold to shoot up to 1927 in 2011. Now, if you remember, in 2011, one of the major news that shook the globally was the Japan tsunami. All right, now this caused the major damage to their nuclear reactors, sending shock waves to the markets and especially gold, the markets. So even right now, I have news coming in about how are they going to dispose the waste water, whether into the ocean or not. So, you know, after 10 years, they are still handling this issue. So it is quite a huge news back then. So in 2011, we also had Osama bin Laden's death, as well as Gaddafi, the Libyan dictator. He was killed during the crossfire with the rebels. So, you know, for this year, for gold to hit 2089.2, what is the key reason for it? You know, it's not natural disaster, all right? It's not definitely not rumors of war. You know, this year we are seeing about 23% change in gold prices year on year. So one reason why gold outperformed his peers, such as equity indices, is because of the weakening of US dollars. And really, in my opinion, right, is the lack of confidence in the governments. So, you know, going forward, monetary crises are building up, especially please watch for the next 24 months. More activity is unfolding. For example, take a look at Europe. Like after they launched QE, after QE and the sovereign debts issues, you know, all the global company, of course, the global governments, they have been stimulating the economy by injecting money, you know, and all these will have to come at a price. So we will start to see them really unfolding for the next 24 months. So we need to keep an eye on this. All right. So overall, I would say that gold is on a bullish run unless we see gold close on month to month below 1519.6. This should cause some alarm bells. All right, so far? Okay. Now, on a weekly time basis, gold has been trading on a very tight channel, as you can see here. Very nice. Supported by key drivers such as mentioned earlier. So as long as price don't close below the weekly reversal of 1766 or 1706.20, sorry, the bull run should continue with some slight profit taking rebound. Okay, so as long as it touches the lower channel, I will always think that, you know, there's an opportunity to get into the market. Okay, so any questions so far? Yes, still continue to float some of the questions that you are burning to ask me. Okay, yes, I have one from Kenneth Fu. Is this Zoom meeting free for PC traders? Oh, Phillip Capital, right? Okay, Phillip Futures, actually. Yes, this Zoom meeting conducted by me is for my traders, my customers under my care. So it will be free, definitely, for you to attend. All right. Okay. So as the questions coming in, so I will just continue. So I cover a lot of information so far, and I really do hope that this is beneficial to you. You know, as we get busy with our lives, tracking your own investment portfolio is really too much for you to handle alone. Especially like this year with the events unfolding, a lot of my customers panic. They call me in the middle of the night, even 3 a.m. You know, and ask me about the direction and things like that. So, you know, as market experts, for me to do webinars and outlooks like once a month, you know, to address the general crowd, I'm only able to give you a very general outlook and general recommendation. But if you have someone that is able to look at your portfolio and open up all the books and advise, like, is this the right time for you to step into gold investment, or have you already invested heavily too much? So this is why I mentioned that we need to go to people who are in the markets and they know what they are doing and what they are dealing, and the products, they know it by hand very well. All right. So at Phillip Futures, our brokers are highly qualified to handle all your requests. So during this webinar, do give us some thought about it. Okay. So if you do have a list of questions and you want to discuss with me, but it's not so short that you can just float it over to me during this session, you can just email to me. Not an issue. If you have something private that you want to talk about, you can do so. You can drop me an email, all right, and I will respond to your questions. Okay, so far, let me see. Okay, Thomas, any unit trust available for gold trading? Currently at Phillip Futures, we don't have any of that. Let me see, what else do we have? What's the best level to enter gold now, from Ashley? I will share with you later the second part of it. Okay, and let me see. What are your prediction if Biden wins? Okay, everyone would like to always ask me such questions, and I always give the same answer. I don't predict, because anything goes, really, no point predicting. You see, seriously, for us, we have been in the market for so long, and we have weathered through many presidential elections, and from Obama to Trump, that was quite a major election back then. The markets really did shake a lot, and for us to really predict how is it going forward or not, it was too far-fetched for us to understand, because although they can introduce plans after plans, and 5 trillion budget to be spent, it's also just a plan. Whether will it be approved by constitution or not is a separate thing. Will the House of Democrats, will they approve it or not, is a separate thing. So going forward, to me, I always think that no point predicting. Or the best way to trade the market during situations like that is to just watch your key levels and reversals. But of course, you also need to know overall the market sentiments and things like that. Okay, let me see. Okay, Jesse, what is short-term view on gold? Will it dip lower to 1800? Yes, I will cover that later. Okay. What else to? Okay, I will just take one more. Since everyone has many questions tonight, which is great, but I'll just take one more for now. Let me see. Okay. Okay, many of your questions are about the stimulus. So for Lawrence, Mr. Lawrence Chang, you were asking about US stimulus. If it's less than 2.2 trillion, will it make US dollar stronger and affect the gold price? Now, stimulus is stimulus. When you have a stimulus, okay, be it 5 trillion or 2 trillion, is still a stimulus. And as long as you are pumping money, US dollar will weaken, all right? But there's a factor about pricing in. So as traders, we know that the market will always price in first. So that's why you see that gold is bullish, because it really is pricing in the stimulus. Whether it comes before 3rd November or after 3rd November, the market sentiment is there will be still stimulus. Whether is it approved at that figure or not, whatever it is, the market is already pricing in. So USD will not be stronger. In fact, it is the government is trying to weaken the USD also. Of course, when issues like pandemic and even war, in fact, and when the Lehman Brothers, when they collapsed, what they did was to really just keep pumping money into the economy to stimulate it. So USD, I would think that it will not strengthen anytime soon, because it has always been on their agenda currently to weaken USD, to make it more favorable for investors to start trading in the risk-on asset classes. Okay, all right. Okay, so I just move on to the next questions. Okay, next one. All right. Let me just move on. I'll just continue to float in your questions, and I'll answer them during the next break. Okay, so now moving along, now you probably will understand a little bit on the gold outlook so far. So what else do you really need to understand before you want to consider Phillip Futures to trade gold? Now, at Phillip Futures, we offer two types of gold. Okay, there's spot gold and gold futures. Now, spot gold meaning that the source of the gold price is from banks. Okay, gold futures is from the exchange themselves. All right, so we have a few exchanges that is supplying the gold futures prices. And why I only put Chicago Mercantile Exchange is because this is the one that is highly traded, the highest volume, volatility, and most traded exchange in the whole world. So most of the time, I will point to retail customers to this if you want to trade gold futures. All right, so for the difference in spot gold and gold futures is the expiry. For spot gold, there's no expiry dates that you need to remember and take note of. So it's auto daily rollover. All right, so for gold futures, there are expiry dates. So the active months are the February, April, June, August, and December. So currently, we will be trading the December contract. Okay, so the contract size is also different. Okay, spot gold minimum, the smallest contract size that it is 1 ounce. Okay, whereas for gold futures, the smallest is 100 ounce, or the mini size is 10 ounce. Okay, and this is important because this will determine your margins. Margins required for 1 ounce of spot gold is USD $380, as compared to gold futures, 100 ounce, you need about USD 11,550. So these are the margins required, and this is the smallest value. Okay, so you can only add, say for example, spot gold, you can trade 2 ounce, 10 ounce. So your margin, you just times 2 or you times 10. You need this amount of margins in your trading account before you can even trade a contract of spot gold. All right, for gold futures, it's the same thing. The mini size gold futures is 10 ounce, but the regular size is 100 ounce. So you cannot break it into like 50 ounce or so unless you trade the mini size. You can just times 10 of it. Okay, now profit and loss, you also need to take note about that. All right, for spot gold, 10-cent gold price is USD 10 cent. Okay, because you are looking at 1 ounce, right? As compared to gold futures, if you are trading on a 100 ounce contract, a 10-cent gold price movement will relate to USD $10 of your profit and loss. Okay, clear so far? So if you are really interested in trading gold, this is a chart that I will highly recommend that you take a screenshot, you take a photo, and just keep it with you, because profit and loss calculation is quite an active thing that you need to do once you start trading. All right. Okay, so what else you need to know before trading gold? That will be the fundamentals and the technical analysis. Okay, so let's go through them in detail. Okay, so fundamental analysis, Firstly, what kind of background research you need to gather when you form your fundamental analysis? Okay, first you have to know your news. Okay, like in the morning, I always say that to my traders. What are the breaking news for the day? Okay, which basket is moving? Is it the equity indices? Is it commodities? Is it currency? All right, you need to train yourself to be able to pick out all this. All right, so as mentioned earlier on the key drivers for gold performance, so you need to check on news pertaining to those key drivers. You know, are there any more news on the development of vaccines, or is there any new political tensions arising, especially in correlation to US and China? So if you do observe, if let's say, for example, if you observe the USD currency pair, they are trading higher. Okay, so definitely the tendency for gold to trade higher is there because it will mean that traders are playing on USD weakness. Okay, so this is how you form your analysis. So the next part is which market are reporting big movements. Okay, and then focus on the news on why such movements are happening. So the next piece of research together is the economic data that is concerning gold. Now, I will elaborate on this in a while, but let me explain on the type of market reports I provide for my clients and traders. So on a daily basis, what I do is that I will gather all the breaking news from all my sources and piece them together. So this is coupled with analysis of what is going on currently and what possibly will happen in the near future. Okay, and then of course I'll blast them out. Okay, why I do this is because I know how frustrating it is for new traders, especially because they might feel so overwhelmed with so much that's going on and so many news that they do not know how to sift through what is important and what is non-essential. So, you know, and meanwhile trying to make sense out of the whole picture. So for me, this is what I do usually. And so far, my traders, they really do feedback that they are able to learn through these reports and very, very beneficial so that they can really, you know, focus on the economic data that is important pertaining to their product of interest. All right. So back to gathering economic data. As usual, there are tons of data out on a daily basis. All right, so to be able to sift through all this data and pick out the important ones will help you to be more focused on your trading strategy. Okay, now for tonight's discussion, the key economic data for trading gold is jobs data. All right, this is why I started off with the US unemployment rate. And this refers to US jobless claims. In a nutshell, more claims means more jobless, means less spending, affecting the economy as a whole, and more funds flow to go for uncertainty. Okay, now another piece of research that you have to add to your analysis is to take note of central banks meeting. As I mentioned earlier on, we are ever more so connected right now, and all the countries are more talking about global trade and really, you know, every country is a trading partner. So because we are trading gold in US dollars, we need to know what is the chairman of Federal Reserve is currently discussing and his outlook for the months ahead to find hints whether he will propose to inject more money or cut rates. All right. So it is also very good to pay attention to European central bank meetings, the Bank of England, the Bank of Japan, because they are major alliances. We are all connected. So therefore, if any of these alliances, they propose to inject more money than what they have already injected in, okay, we are likely to see Federal Reserve to also follow suit. Okay. Okay. Moving on to technical studies. All right. When it comes to analyzing charts, we want to keep it simple and it has to make sense. So I observed from some of my new traders they have a lot of indicators on their charts, you know, but their trading ideas are not solid, and they can't really explain why they decide to buy or, you know, sell short. And most of the time is based on gut feel, you know, or their own perception of the market. So my approach has always been looking from a big frame to from monthly, you know, then you scale it down to weekly and daily time frame to check possible reversal in every period of study. Okay, so here we see the past goal performance for 2020. It has been trending up steadily over the months with healthy reversal levels cited at every wave. And I would like to pause here for a while. Okay, healthy reversal. This is a healthy reversal. This is a healthy reversal. It is not something to be shaking, you know, your PC monitor. You know, it's not really that detrimental in that sense. If you look at it as on the long run, on the long-term basis, and you do some you know, technical studies, the longest cycle, which according to Elliott waves, is this cycle, you know, and has been very steadily going up. Okay, so it is expected to have some slight retracement. All right, that's why it goes in waves, it goes in cycles. I do a lot of studies on cycles also, and we don't look at day-to-day cycle. We look at years cycles of all asset classes, of their movement, their performance. So when gold drops this way and then they continue to drop this way again over here, to me is just part of a healthy reversal. Okay, so we just have to take note on that basis. So as mentioned earlier, during the market outlook, you need to keep in mind the reversal levels. So here I picked out the reversal levels using support and resistance. Okay, now overall long-term reversal levels to watch out is 1851.20 over here. Okay, why? Because we are in this picture right now. Okay, so the first bearish reversal is 1851. Okay, this is long term. Why? Because this is the year of 2020, the whole year. Okay, now if subsequently it is triggered by, say, maybe a chain of market events and market sell off to until 1702.50, this one, okay, this level, we should be watching very, very closely. This could really signify a shift in funds moving into other asset classes. Okay, all right. So for it to reach the first bearish reversal is not really any alarming bells to be ringing. But if it goes to 17, that's something that you need to watch out if you are long. But if you don't have any position, oh, it's great. You know, it will be good for you to hop in. And a lot of times they will say, oh, if I hop in here, but what if it, you know, continues to drop further to like this area? So this is the thing where I always I would do during the Zoom meeting to really explain to you that, you know, the risk management is very, very important when you trade products like that. Okay. All right. So for channel studies, we observe that gold has been on a steady uptrend. Of course, for the whole year, as you can see, is very nice, neatly done. So meaning to say, if prices do come off close to the lower channel line, which is here, I will look for opportunities to buy in a position, as I expect gold to continue to be trading in this channel. And I believe a lot of traders have been doing so, because I see a lot of buying opportunities bouncing off this line. Okay, so next I scale down to the daily time frame. Okay, So this is where quite a few have been asking me, what is the best price to hop in right now? Just a general analysis of this chart. What is it you are looking at? Now, the prices have been hovering around 1970 to 1850 range for many, many weeks. Yesterday closing is 1903. It actually broke that range, and it has been really hovering around here, and it's trying to move back up here. Now, I observed that even though there's a sharp sell-off early in August, okay, it actually stays supported for many, many weeks. Okay, so which means that even though there's this sharp sell-off here, if let's say the trend turn for good, it should continue to sell off. But over here, it was undecided, and after that, it stayed really supported. Yeah, there are still a lot of sellers trying to push it down, but after that, it kind of like just really, really stay in that very tight range. So for me, I think that gold is not going to come off anytime sooner. Okay, if you are looking at the key drivers as mentioned earlier, the geopolitical political tensions between US and China is not going to ease anytime soon. Vaccines, even though they say projected ready in November, how effective it is still a big question, and also not forgetting the US president election, which is going to be the biggest highlight of this COVID-19 year. So, I would actually really, really advise that if the prices do come off, okay, and they are within this range, if you want to do a short-term trade to just get your feet wet, just testing it out, this will be quite a good level to go in at about 1848 if it's doing around this range. If it's not close to this line, you can test for a buy. All right. However, you need to take note that if the prices do crash through within a day, not like over days and months, to our projected crash level here at 1791, all right, you need to prepare to cut loss and wait for price to sell off lower before entering again. So, the thing is, for outlook like that, there's only so much that I can share, because everyone, their risk is different. Their risk appetite is different. The investment portfolio they are looking at is also different. So how to say, your cut loss level and your risk appetite, is something that is very personal, and it has to be a mentorship basis that, I guide you. Instead, like now, I explain to you, okay, you cut loss at this level, because my cut loss level might not be your cut loss level, So everyone's risk appetite is different. So I will always say that when you want to trade in markets like that is very fluid, there's a lot of volatility, you need to have someone that can really guide you and to recommend to you the possible cut loss levels. Okay. Okay, so for me, my tip and advice for investors is to view gold price dips as great buying opportunities. Firstly, fundamentals, I already mentioned to you, global economy is going up in a smoke, and from all the pressures of coronavirus, it's picking up again. So there's no reason why gold should come off. And if it does, just an opportunity to jump in. Okay, so let me just stop and take a break, let you digest a little bit, and I'll just look at some of the questions here. Let me see. Mr. Yo, go short-term bearish from a descending triangle based on your charts. Yes, short-term bearish. Let me see. For the coming month, how much volatility are we looking at, Kenneth Fu? Okay, a lot. We are very, very close to the polling dates, which is the 3rd November. Everyone is eyeing on it. I can tell you globally, all my colleagues and all my analysts, friends and all over, they are eyeing on this US presidential election. It's going to be really, I would say, one of the worst ever in terms of the structure it is, with the fighting and all. So, it's going to cause a lot of shaking, a lot of volatility. So as you know that if there is no, when there's a leadership vacuum and it goes into a prolonged period of time, civil unrest, and gold prices will definitely be increasing. Okay, due to, I wouldn't say safe haven, but it's more on the bet on the confidence in the government is lacking. Therefore, USD is weakening. Let's put it that way. Okay, so volatility definitely will pick up. Okay, for the coming month in November itself. All right. Let me see what else. Okay, I have one from Miss Ismaya. So she says that she's new to futures, usually trades shares with poems. Any tip to learn this? Maybe have webinar events coming up soon. Yes, I do. This is an outlook. So I will try to do an outlook every 2 months, to address your general concerns and, all your questions that is popping out in your head and or screaming at you. And but on a weekly or rather twice a month basis with my own pool of customers under my care, I do meet with them and they will share with me what are they going through, what are the problems, and it's easy for a third party to see what you are doing and to look at what you are missing out, because when you're so focusing on the market and you're just only looking at your own trade and you're wondering how come did I make a mistake and things like that, it's always good to have someone on the third party from outside to identify the possible mistakes that you might have overlooked. So will there be more webinars events coming up soon? Yes, there will be. I have one on 8th of December. So that will sum up the elections. It will also sum up the upcoming next year projection for the asset classes like equity indices, gold, how is it going to be performing in this upcoming 2021. All right, so do watch out for that. Okay, what else? Okay, I have one here from Paul. He says that I have a RM, okay, so from a bank, all right, that handles my investment portfolio. Isn't that sufficient? Okay, no. RM from banks, in a nutshell, I would say that they handle unit trusts, investment links, insurance products, or structured products that the banks write out themselves. Okay, and these are just one aspect of your investment pie. You don't I always recommend don't invest too much in one bank. Okay, spread it out. All right, and if you have RMs from bank nowadays, the RMs are very hardworking. So meet them, and check out what they have to offer to you. All right, and see whether they can meet your target returns. All right, because most of the time I've met quite a fair bit. They are very much heavily invested in one basket. Okay, and it's very, very risky if you do that. All right, even though they keep saying that, oh no, this is very safe, the returns are very little but very safe, that kind. Yeah, okay, yes and no, because when we are not talking about whether the risk is high or not, because if it's really concentrated in one basket, say, for example, unit trust, you know, it's too much. You tip too much to that side already. You know, to have a sound portfolio, I always recommend that you take all your current assets, your cash, your savings. Don't include your CPF, of course. Your house. Okay, your house is not an asset until it's fully paid. All right. So, and it's only an asset if the current market value is higher than what you paid. All right. So you take that into your consideration. Okay, and then you look at your current investment portfolio. If it's heavily invested in one basket, I always say you need to spread it out. Spread it out. Be it invest in small blue chip companies in Singapore. You can collect dividends. That's one basket of diversifying your investment portfolio. Okay, instead of pushing everything into unit trust, and then you have some in unit trust, some in stocks, some in bonds and or even US stocks also. And for us at Gold Futures, this should be something that is on a sideline, meaning additional. Okay, so the rule of thumb is that you must have at least 10% to 20% target returns for your investment portfolio. Okay, so this is what I say that don't rely so much on the RM banks. Try to meet more than one, okay, from other banks and see what they can offer you to balance out your investment portfolio. This is what I always suggest. Okay, so I will do the same, of course, when you come to me. Okay, now, okay, the time is running short, so I need to speed up a little bit. I will address your questions. I will email you, so not to worry. Okay. Okay, so now the forefront of Phillip Futures platform is MT5. So this is a multi-asset platform, meaning it has Forex, CFD, bullion, such as your gold and silver trading. Now, the beauty of this platform is the ease of use, and this is also available on mobile phone trading. Okay, so, but why is it so important? Why is it so popular? Is the ability to initiate two open position without knocking off each other. All right. And the best part is you also can create your own automated trading program. All right. So say, for example, I have clients that they are really working. Okay. And there are also full-time traders. So some of the full-time traders back then, they were working and also trading. And they told me it's very, very difficult to juggle both. So they decided to quit their job and go into full-time trading. Now, with that, that's why they like to use automated system, because the system can capture your general parameters, okay? And it actually runs by itself. So for example, if you want to set your moving averages like 15, 50, your slow moving average 15, your fast moving average 15, your slow 50, you can set it all in the MT5 and you can auto run. And then also, it can actually put in more information. And then it's so simple to just create your own trading program by itself. Okay, so on top of that, we have something called the auto chart. Now this is very, very good for people who are just starting out to trade, because a lot of people might not understand what is engulfing. They might not even understand what is bearish reversal. So this is an additional feature that we invested in. So it is a plugin where you add into your MT5 program, and it will auto chart out the patterns and calculate your risk. Okay, so this is how it looks like. So of course, with technology, you can also customize what type of patterns at which state of formation you want to see. All right. So coming to the last leg of this session tonight, I will just brief you what are the current promotions that we have. Okay, yes, this one. To encourage traders to try out MT5, Phillip Futures is running a promotion from 1st October to 13 November. Now, every trade on MT5 will give you an opportunity to win some prizes. You can scan the QR code here, or I can also tell you what are the prizes available. We have the Apple Watch, the Dyson, MacBook Pro. These are like gifts that I like also. But so how it does is that when you open an account with us, okay, just do a trade and you are in the lucky draw already. So of course, the more you trade, the more chances of you winning. All right. So next is the refer a friend program. Quite a number of my traders are attending tonight's seminars also. So again, a reminder that they can refer their friend, okay, or neighbors, and they will earn about USD $104 for the referral fee lah. Okay, so there's no limit to how many people you can refer. All right, so if you want to find out more, just email me. Okay, so the requirement to open a live trading account, its minimum deposit is $500. You can use this to trade, and all you need to do is to scan the QR code. All right, and this will bring you to an online form then you can fill it up via my info. Okay, so as mentioned earlier, knowing the direction of the market can only give you 50% of success, but structuring your trading portfolio in terms of size and quantity is the next 50%, I would say. Like I already said that gold is bullish in the long term, so you might be thinking, okay, so do I trade 1 ounce or do I trade like 100 ounce? So you really need someone to really guide you in that area and not like you just do it without knowing much about it. Okay. So, as I mentioned, we at Phillip Futures, we have brokers. Personally, I've trained some of our brokers, so I know where our standards are, okay, in terms of market knowledge, ability. And so I believe that so far we are able to assist our clients far better than any broker in the market. Okay. All right, so I'll just take just 1 to 2 questions before I end off tonight. Just 1 to 2 questions. Okay. Compare the volatility to COVID and the upcoming months in 1 to 2 months. Upcoming month, November, yes, definitely it's the highest in November. December, I'm not sure because still it has to look at how the election pans out. Okay, during the months of COVID-19 pandemic, it's considered one of the highest in years. Definitely, yes, kind of. Is it good to hold gold on a long-term basis? Yes, for joy. What's the long-term target for gold price? As I mentioned, is long-term target can hit above 2,000. All right, so how far can it go? Sky is the limit, really, because so far, what I understand from all my sources, a lot of analysts, they are projecting 2050. That's the first part because it already went as high as 2089. So the first part is about 2050. If it continues, it can even hit like 2200. Why not? So this is very, very short term, like probably the next 1 to 2 months movement if the US president election is going to be as bad as we expect. Okay, all right, so Okay, so let me just finish off tonight's with the last question that I find so exciting or interesting, in fact. On a scale of 0 to 100, what is the possibility of a stock market crash in the next 6 months? Mr. Yo, it's, it's quite interesting one. Okay, I'll leave you that to think about. But for me, crash, I've been hearing that, even for my own colleagues, the probability of a stock market crash. If you're talking about US stock market crash, okay, it has been recording a few downs for that few days and few weeks already. Probably, I would say if the US election turns out not to be that good, for the Singapore stock market to crash, I don't really see that much because firstly, Singapore stock market is pretty much small as compared to the global stock market by itself. But if you're looking at US stock market, there's a possibility of retracement for it to turn down. So I would say the probability is still 50-50 lah. Okay. So thank you all for tonight. Your questions have been really, really exciting and very, very interesting and funny also. So I will address them. Don't worry. Okay, it's a lot of questions. I will take some time. I will email you and I will explain to you. And so I trust that it has been a fruitful 1 hour. So do remember, I have another Outlook coming up on 8th December. So just register early when it's available. Okay, so a link of the recording of this webinar will be made available to you in our follow-up email tomorrow. Okay, so if you do have any inquiries, besides the questions you have already posted here, and you really want to get started, like I think I saw someone saying, don't know how and how to start, don't worry, okay? I will get in touch with you, all right? Just give me some time. There's a lot of people here. I will take a while, but I will get to you, all right? So thank you. You have been such a great audience tonight with your fantastic questions. So this is Shermaine, your trainer for tonight, signing off. Have a good evening, okay? Good night.